In this video, I will show you 3 stocks that I find interesting, and out of the 3, I have already bought 2. Maybe I will buy the third one. So literally, I think these companies present good buying opportunities at the moment. Let's get straight to the point. For those who don't know me, my name is Christophe Nour. I'm a stock investor, and picking stocks, I have averaged a performance of 24% per year for the past 7 years. So 24% annual returns, picking great stocks at a good price. And I think these stocks today present a good buying opportunities. So let's not waste some time. The first stock I want to talk about is Evolution. Evolution AB. This is a company that is in the online gambling space. This is an online casino company. They create games for casinos. And if you look at the financials, you will see spectacular results. This is a company from Sweden, a Swedish company. The market cap is $20 billion. So we are talking about a mid-cap. This is not a large company, but definitely not a small one. And this is a B2B provider of live and slot casino systems. So they develop games in different markets, regulated markets, unregulated markets, across various regions of the world. And if you look at the margins, if you look at the financial profile, you will see extremely good operating margins, extremely good gross margins, extremely good net margins at 50%, and extremely good free cash flow margin at 50 to 60%. You have a return on invested capital of 30%, so high investment rate. And if you scroll down here, you will see some amazing chart for the revenue growth, earnings growth, free cash flow growth. So here you see in blue the revenue growth going up and to the right. In green you see the net income growth, so profits. You will see about the free cash flow generation here. That it's literally an exponential growth, an exponential chart up and to the right. And regarding the balance sheet, they don't have debt. They only have a growing cash pile, and they have a high return on invested capital of 30%. Don't be scared about this chart. It's just that they did an acquisition into 2020, so the return on invested capital was impacted, but still above 20%, above 25%. So you get a company that is growing nicely, like above 20% per year, 30% per year, with excellent margins. And it is trading right now at a PE of 16, forward PE ratio of 14. So literally, if you compare this stock, this valuation to the S&P 500, it's very cheap, and it's a higher quality. It's not an average business, it's a higher quality business, and it's trading at a cheap price. So why is it trading at a cheap price? I will tell you right away. If you go to the quarterly charts, you don't see an exponential growth, because there is a slowdown in growth for revenue, for earnings, for several reasons. First, in their studios of online gambling, they have been some strikes during the summer. So the strikes impacted the mood of the studios. They closed some studios, some blockade, and this decreased the operations, so less tables available, and this caused a mess in Georgia, the country called Georgia. But now it is resolved. It's almost finished. The strike is almost finished, so it will resume, come back to normal. Second, because it's an online gambling space, they are based in Malta for tax reasons, like all the gambling companies, and in Malta they want to increase the tax rate. So before, Evolution was benefiting from a 7% tax rate, 7-8% tax rate, which is absolutely nothing. And now from 7%, they will up the tax rate to 15%. So you will have a one-off event of lower profitability for this year, 2024, and the beginning of 2025, if I'm correct. So you will see some lower profitability, but it is a one-off event. Once you implemented the high tax rate, growth will come back to normal. The earnings chart will come back to normal, come back to the growth. And so you have 2 reasons for why it's trading cheap, because it adds some uncertainty regarding the revenue, the net income, the earnings, the cash flow generation. And the third one is that they want to go in North America. They want to expand the studios and they want new customers in the US, in North America. So this is a new market for them. And if you compare their current operations in Europe and in Asia, cheap labor, if you compare this to the US, the cost per employee is higher and it adds uncertainty. Nobody knows if they will succeed. They told us shareholders, yes, we plan to go to the US. We will see how that goes. Maybe we will fail, maybe, but we are optimistic. But nobody knows. And because nobody knows, it adds more uncertainty. And the regulation in the US could be more technical because you have a regulation state by state. So all of this creates uncertainty, and the stock market doesn't like uncertainty. This is why the stock is trading cheap. This is why the stock is dropping. And now we have a valuation of 15 times earnings for a stock that is growing nicely, a stock with no debt, a stock with a lot of cash. They give investors some dividends, some buybacks. They are smart regarding capital allocation, and they have very healthy profit margins, cash flow generation. This is exactly the kind of perfect situation you want to be in when you buy a stock. And for this reason, I think Evolution is a buy at this moment. I have bought it recently. Okay, the second stock I want to talk about is Alimentation Couche-Tard. Oh, whoops. Alimentation Couche-Tard. You know what? The ticker is ATD. This one. This is a convenience store in the US and Canada. And this has been a compounder for years. And this is a market cap of $15 billion. So we are in the large cap sector. Alimentation Couche-Tard operates a network of convenience stores across North America, Europe, and Asia. The company generates income through sales of tobacco, products, groceries, beverages, fresh food, quick serve restaurants. They do a lot of stuff. This is a convenience store. This is a chain store. And you have a recent weakness regarding the stock price. If you look at year-to-date results, they have a loss, minus 5% returns year-to-date, compared to the S&P 500, up 20%. So you have a mismatch here. And this is a high-quality company with some good margins compared to the industry. You see some strong growth regarding, that's the revenue here, cyclical but growing, net income growing up and to the right. They have some debt, but this is normal for a convenience store. They generate more cash flow year over year. You see, this is the free cash flow generation for the past 10 years, more cash flow. And they have a decent return on invested capital of 10 to 15%. And they do some buybacks. So I like what I see. If you are a long-term shareholder, this is exactly what you want to see. They have been profitable for years. They have been growing for years. They are smart about doing acquisition. And now the PE ratio, the valuation is roughly 20 for a superior business. And now we have some drama regarding the stock because they are doing an acquisition of another store which is called 7&I, which is a Japanese store chain. I didn't know this Japanese chain, but apparently they want to do a big acquisition. The Japanese company refused, so they hired the bid, like plus 20% of the price, and seems like they don't want to be acquired. So they want to protect themselves. They want to do some divestitures to strengthen the balance sheet, and this adds uncertainty to the stock right now because Alimentation Couche-Tard is struggling to do an acquisition. Nobody knows if they will overpay for the acquisition. Nobody knows if there will be synergies in case they are acquired. So yes, this is this article for you. Alimentation Couche-Tard raises bid for 7&I. So it is offering a large sum of money for the parent of 7-Eleven convenience stores. So it will add more revenue, more earnings, but nobody knows if this will add more margins, more profitability or not, synergies or not, and what is the price you pay to do your acquisition. So now shareholders are uncertain and we see some weakness in the stock price. I think this is a good buying opportunity for for Alimentation Couche-Tard, given the current weakness. I have read here, I think in the bookshelf there is a book about Alimentation Couche-Tard, and I've read the biography of the company. I've read how Alain Bouchard, the CEO, the founder, started out, and I believe that their vision for Alimentation Couche-Tard is very clear. So this is not the first time they do a big acquisition. This is not the first time they take some risks. This is not the first time they are aggressive with the price, and every time it was a success. So the market is uncertain and maybe pessimistic, but if you understand the company well, you understand the vision, I think it's a great buying opportunity at the moment. And the last stock for you is Gravity. Gravity, the ticker symbol is GRVY. This is a small Korean company listed in Nasdaq, so literally you can invest in this one. This is a micro cap, a small cap. The market cap is $400 million. This is an online game, a mobile game company in Korea. Gravity is an online and mobile game developer and publisher based in Korea. So they have a license called Ragnarok, and they sell mobile games, and they make money out of in-game currencies, in-game purchases. And right now, if you look at the financials, this is some good growth. Revenue going up, net income, you see some excellent charts. The company is profitable and the net income is growing. They don't have any debt. They have a lot of cash. You have to be cautious regarding the balance sheet in Asian companies for Korea. So most companies in Korea have a lot of cash, but yeah, literally you see a lot of cash for the company, and they generate a lot of cash flow, growing free cash flow with growing return on invested capital. And if you want to be more precise, you look at the quarterly basis, you see the cash of $366 million. That's strange, you would say, because you compare it with the market cap of $400 million. So almost all the market cap is in cash. So you almost buy the company for free, like the growing business model for free, which presents an amazing opportunity. The PE ratio right now is 6, one of the lowest valuation ever for the stock. And despite the volatility over the past 5 years, now it's much more calm actually, and we are trading at historically low valuation. Nobody wants to buy the stock, and year to date the stock is down -11, -12%. So you have a decline in the stock price, but still they have a lot of cash. Still, this is a good business with good margins, profitable, and nobody wants this one. So yeah, this is the stock that I've bought recently also. So I've bought Evolution and I've bought this one, and I think I will do a deep dive on this Gravity stock for you on this YouTube channel, because I think this is one of the most compelling investment idea in the moment. So if you want me to help you find these opportunities in the market, you can check the first link in the description. I have a coaching program if you want me to help find these golden opportunities. This is exactly what we do with our students, and I think these 3 opportunities, if you buy them right now at the current prices, I think it can generate double-digit returns. I mean, I've bought them, so literally I walk the talk here. If you like this content, I have an investing coaching program to make you a better investor. In this coaching program, you will learn a complete investing process. You will learn how to find stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. So what comes with the coaching program? You will get access to an exclusive community of like-minded investors, and you will get my personal guidance to help you build the portfolio of your dream so that you can have long-term results with your stock portfolio. Click the first link in the description to get more information. You will get a 10-minute video that explains how everything works completely for free. No need for your mail address. Just click the first link on the description and I'll see you on the other side.